Good morning. Welcome to listen to the presentation about the real world assets meet decentralized exchange. Basically is centralized and decentralized, traditional finance and decentralized finance. Sounds pretty confusing. Hopefully I can explain it in the next 10 minutes. So before I come to a couple of slides, please watch a very short 45 seconds video about DigiFT. Okay, thank you. Let me dive a little bit detail into the message we put in the video. So as you can see, this team, it is giving the background. It is we call the deep fin plus deep tech. We combine a group of very excellent people from the traditional finance, Web 2, and also the Web 3. This is how we organize the team. So who we are? What is DigiFT? DigiFT is a regulatory compliant RWA DEX. Basically, we're focusing on three things as a positioning. Number one, we tokenize real world assets. But more than that, not only real world assets, but also this kind of crypto native assets, which are security features. So we call the tokenization of security tokens. Number two, as an DEX, as an exchange, as a marketplace, the technology we use is mainly DeFi, because we are strong believer about the decentralized finance, which means we're using blockchain as a tool. We're using decentralized finance as a tool, not only just an asset, because decentralized finance based on the blockchain has unprecedented values. Number three, very, very important, being licensed, being regulated. So DigiFT is a regulated DEX for security tokens. We combine these three things together. And it's a Singapore company, so we're in Singapore. That's why we get a license in Singapore. As shown here is we have two licenses. Basically, the two licenses allowed us to do two things, tokenization and also the trading of the tokens. We are very proud. We are the first and also so far the only one be approved by the authority in Singapore as a regulated DEX. What are we solving? What the pain points are we addressing? We said we're bridging TradFi and the DeFi. We do see there's a lot of good things about TradFi and also a lot of good things about the DeFi. But on the other side, there are some disadvantages or problems in both DeFi and the TradFi and the DeFi. Take a TradFi, for example, so-called centralized. We heavily rely on the central party. So the central party goes wrong, the market has problem. Now, of course, lack of transparency because we rely on the central party. And there's a lot of intermediates in between. So we're dealing with a lot of intermediates. The more intermediates we have, actually the longer time, high cost, and the high chance from being wrong. And also, so since TradFi is the dominant, many TradFis lack of incentives to be innovative. But on the other side, there are a lot of good things about DeFi, but DeFi also have some disadvantages. I list a few. DeFi is highly unregulated. Some people say DeFi is good as long as nothing goes wrong. If anything goes wrong, technically or governance, is in deep trouble. Number two, limited liquidity. When I say limited liquidity, I mean there's a very few assets or limited assets, popular assets on DeFi. BTC, ETH, maybe some others, but totally how many? Asset volatility. Some people like volatility, which is good. Volatility is good to a certain extent. But on the other side, the DeFi assets are too volatile. And I need to highlight one thing, not only the volatility, the key problem is they're moving in the same way. When BTC goes up, ETH goes up, and all the coins goes up, vice versa. So I call it the high correlation, which accelerates the unnecessary volatility. And of course, the limited investor protection, because it's heavily unregulated. If anything goes wrong, you have no one to talk to. And because this is called the investor protection. So there are some problems to solve, and we try to provide some solutions to address these issues. People heard a lot of marketplaces. DigiFT is one of the marketplaces in the market. So how can we compare to DigiFT to some other marketplaces we call exchanges? Please just look at this chart. Vertically, it's called regulated or not. On the top, regulated. Bottom, not regulated. The horizontal line we call the interoperability. Basically is the adoption of DeFi technologies. On the left-hand side is very much centralized. On the right-hand side is tend to be decentralized. Then you can see the familiar names like NASDAQ, for example, on the top left. NASDAQ is a traditional marketplace, very well regulated, very mature, but they are also very centralized. On the opposite, you can look at the bottom right. For example, Uniswap. Uniswap is a genius invention in the market, very decentralized, so the interoperability is very much. But as a matter of fact, Uniswap is unregulated, so Uniswap cannot deal with securities, tokens, etc. Then DigiFT, the role we take is the top right. Top right means on the technology side, we love DeFi. We use DeFi technology to achieve the interoperability, composability, immutable, this type of benefits we want to leverage. But on the other side, meanwhile, we want to be regulated. We work with regulators, we're embracing regulations. So we put the governance and the technology together. So it's a top right. There are not many people in this area so far. That's why we call the industry-wide space. Why is that? One thing is probably people didn't realize the value to combine the technology with the governance. On the other side is the regulator. Regulation is always behind innovations. Regulators start to talk about it, but there's not much practices in the market yet. In this regard, Singapore is pretty advanced. That's why we come to Singapore and get a license in Singapore. And Singapore is a tier 1 financial market in the world anyway. We talk about what the DigiFT is. Then we talk about market a little bit in the next 5 minutes. This page, I will say one thing, is DeFi and TradFi, we don't think they are exclusive to each other. Basically, we are seeing the trend of convergence from two sides. One side is TradFi, a DeFi side is seeing the value of TradFi. For example, MakerDAO, they are allocating more and more their reserve into the traditional financial assets, US Treasury, for example. Why is that? Very simple. It's very secure and paying you interest. So 80% of MakerDAO's reserve, the revenue, coming from this TradFi investments. So this is DeFi to TradFi. On the other side, we're seeing the trend from the TradFi to DeFi. For example, Hong Kong issued a green bond on blockchain directly. This is very typical TradFi to DeFi. That's why the trend on the convergence, I will see this will be the future. This is also the DigiFT is focusing on. We're not just talking. Since we are licensed in Singapore, in the sandbox for a year, so we do have the chance to launch real products in the market. We have launched a couple products in the market. Here, just a snapshot. From the left, you can see this is a DCS token. Diners Club is the issuer. Basically, it's a private corporate bond directly issued on the blockchain with the AMM. Second one we call the PBRT is a perpetual bond reference token. We tokenize a Barclays bond, which is a CoCo bond, high yield bond. They pay in 9% interest, and last month actually the high yield is much higher. So the people want to take more risk. They want a high yield. They can do it. The interesting is, since we are bridging TrueFi and the DeFi, so not only the investors, you can not only using US dollar to purchase, you can using USDC to invest into this real world asset and out of your wallet directly. In other words, you can invest for this Web3 people, Web3 money, stable coin. You can invest into real world assets without a bank. That's the way we do. So the number 3 product is we call the DUST. D stands for DigiFT. UST stands for US Treasury Token. So this is US Treasury Token. Many people doing it, but the one we launch into the market is a very regulatory compliant. The assets, the real world assets, is very secure, bankruptcy remote. Even DigiFT, we stop doing business, your asset will be there within a regulated custodian. On the other side, we're using DeFi. Again, you can using USDC out of your wallet, MetaMask, Coinbase wallet, etc. You can use the wallet to directly invest into US Treasury without intermediation. You can done this finish in a couple seconds. But of course, you need to do KYC because it's regulated. And the last one I want to mention is very interesting. DETH, which is launched this week, is DigiFT ETH. This is the ETH staking product. Now you can use USDC or US dollar to invest into ETH staking product directly. So this is Web2 money into Web3 assets. So we can do Web2 to Web3, Web3 to Web2. In the end, it's convergence. The last page I want to show here is what do we envision? What's our dream? Our envision is what DigiFT is doing with many other partners of similar values. We are looking at the next generation of capital markets. So ownership is from paper-based to the current electronic-based, now moving to the token-based. So the marketplace will also evolve. The currently is more centered around electronic-based. The later on, the marketplace will center around the token-based. Not saying the current NASDAQ alike, they will disappear immediately, no. I think in the long time, both will exist, coexist in the market. But just token-based is something very, very small, but we're taking a more and more important role down the road. Being token-based, what we can do is one side, of course, we can tokenize the RWA, so-called real-world assets. This is basically digital transformation. But on the other side, I want to just highlight one thing before I finish my presentation is we can also further using the legally compliant way to tokenize those liquid staking or native crypto tokens. SEC, etc., is saying many tokens that are security features. To a certain extent, I agree with that. But this is not end of the world. Even these native tokens, they are securities. They can just trade on the security token platforms which are regulatory compliant, like DigiFT. That's why we put in a big circle to embrace all these kind of native assets plus real-world assets. This is DigiFT trying to achieve. Thank you very much to listen to the presentation.